All right, good morning, trade pros. Welcome to Morning Market Update for Monday, February the 3rd. We are back in the office. The boot camp's over, and I miss all the people in the boot camp dearly. Not just this round, but everyone as well. So we're back in the office, and we're back to another week of trading. Thank you guys for your patience throughout this absence. And I was really excited that I got a chance to bring you down on the training floor where we usually do our boot camps. Very exciting for me. All right, this morning I'm going to talk about, guess what? The coronavirus, because there's a lot to talk about. There were 17,000 as of February 2nd yesterday. There are 17,205 cases reported, 361 deaths as a result. And interestingly enough, in the first 60 days of SARS, the last really big respiratory disease that spread around, or illness, as you could say, all right, we've it's not a good thing. We've exceeded the number of cases that it took 60 days for SARS to accomplish in just 9. As you can see, this virus is spreading at a much higher rate, which is why the markets are worried quite a bit. On Sunday at 8 p.m. or 8:30-ish, some markets, 8 others, Eastern time, the Chinese or the Asian markets and China reopened because China was closed for Lunar New Year. It was extended. So the markets haven't been trading since January 23rd. It's a long absence. So with all this contagion, all the spreading, all this news of the last week and a half hasn't been priced into China. So when they open up really disastrously. Shanghai was down 7.7% on the reopen. Shenzhen down 8.5%. So all Asian markets were down big. Imagine that. 8.5% of the equivalent of a 300-point drop in the S&P right now. All right, even more. That's a significant drop. And tech-heavy Chinese index, Chinex, is down 7% as well. This is the biggest loss since August 2015 when the equity market saw a big downside in the United States and globally as well. In China, there was some action taken to try to contain this. The PBOC, People's Bank of People's Bank of China, injected $174 billion into money markets. It's a lot of liquidity. They did that via reverse repos and cut rates on the funds target by 10 basis points, while Chinese security regulators banned short selling for proprietary trading firms. All right, if you think about that, it's pretty drastic action to contain the market, and yet we were still down between 7 to 9% on different markets in Asia. All right, so this is big news. I think that what the volatility we've seen in the United States just got priced into China. I don't think that this means we could be more bearish because China was down. This just means that China just repriced in all this stuff after being closed for the Lunar New Year. Imagine having an 8% gap, though, being long and not being able to do anything about it, and then when it reopens, you're down 8%. There were a lot of margin calls, as I'm sure, that took place in China. So that's the biggest news item overnight. Other news today, the earnings continue with the next big FANG name to report. Google, or Alphabet, today is doing its first quarterly report with CEO Sundar Pichai at the helm after Sergey Brin and Larry Page officially stepped down from management in December. They're gone from the day-to-day management procedure. The two guys that founded Google are no longer going to be involved as actively in the day-to-day of operations of Google. All right, so this is a key economic report. It's a key quarterly report, and it comes out after the bell at 4:05 p.m. today. Look for NASDAQ to really be pricing in what happens. There's going to be a lot of volatility in the NASDAQ after market closure. Analysts are expecting fourth quarter revenue of $46.87 billion, which is a 20% increase year over year, and profits of $12.76 per share year over year as well, which is flat. All right, in today's markets, Asian equities down big. Hong Kong, though, is flat. India is up 0.3%. Japan's down 1%. So the big loser is China. But, it's a catch-up trade. It's catching up on losses that it would have incurred anyways over a longer period. It all just condensed into one day. In Europe at midday, London's up 0.4%. The Monday after the UK exited the European Union. Paris is up 0.2%. Frankfurt the same. Futures in the U.S. down, S&P up 0.4% off the prior day lows of 32.26, and Nasdaq's up 0.5 percentage point. All right, and it is trading at 90.56 approximately. The big news this morning is out of the crude oil market. I'll let Boxy handle that in our team room in a moment, but I will just mention this. From January 6th high on crude oil of 64.34 down to the overnight low today of 51.02. All right. And the prior day low of yesterday, or Sunday's low rather, of 50.97. Crude oil has dropped over 20%, closely to 20.7, which means crude oil as a market is officially in bear market territory. All right, so there's a pretty big commodity fallout. This is due to a lower demand as a result of China consuming less. All right, being quarantined and being at home means less commuting, less transportation, less consumption of crude oil and energy products. The market's down huge. At 5:17 this morning, OPEC Plus said that they're considering further oil output cuts of 500,000 barrels per day due to the coronavirus impact on oil prices. Most OPEC members agree they need to cut oil output further. So that puts in a little bit of bullish life into the crude oil market, but it's not really sustained. It rallied a little bit on the news, but it's still shrugging it off, showing you just what a fear a weaker demand is on crude oil. Crude's had a lot of overhead supply. It's been an oversupplied market. One thing that was consistent was demand. And now that the crude market's oversupplied and demand has been reduced, it's creating lower price dynamic. And the big eyes right now are on the February 14th to 15th meeting. OPEC Plus will sit down and they could announce bigger production cuts. Saudi Arabia at 6:04 a.m. this morning said they're looking for up to $1 million a day of a cut, which is massive. All right, that's according to a Wall Street Journal article. In other markets, gold's down 0.5%. Bitcoin's down almost 1%, still above 9,000. This morning on the economic calendar, we have PMI manufacturing index at 945. 10 a.m. we have ISM manufacturing index. That's going to be an important one as well, and construction spending. So we have some news at the top of the hour, and then at 4:30, Fed's Bostic is going to speak. All right, that's all we got on the docket. Morning, Will, Angela, Pele, Trader Walt, everyone on YouTube, Johnny Ben, GM Chess, and Tai Chi Gong Academy. Good morning. It's a long name. Does it matter what the PBOC has capped the losses in the market down to 10%? It does, Nob. I think Nob Rubert, is that French? I assume it's French. It sounds fun. It does matter that it was limit down. I think there is more downside as the markets reopen again tonight at 8 p.m. Eastern time. And I think that China needs to sell off more than, let's say, an S&P 500. Because, while the big damage is done from the coronavirus in the Chinese provinces, I think that's where the impact's going to be felt the most. So I'm not surprised to see China down to a much larger extent than, let's say, a U.S. market would be. Because the U.S. fear is less demand from the Chinese consumer, but it hasn't really spread in the United States. There's been cases reported, but no fatalities. And I think if there is a fatality in the U.S., that brings on the potential for a lot of selling. Because if you remember SARS, while there were a lot of cases, there weren't a lot of fatalities. And that was attributed to maybe better medicine, all right, less infection, less infections, all right? So that's going to be the next thing that we're looking for and how this thing spreads. But it surpassed the SARS outbreak, by a wide margin. If you look at a chart, SARS took a little bit of time to develop. This coronavirus is just through the roof already of what anything SARS has accomplished. So it's a bad thing. And that's why markets are a little bit spooked out. Wall Street Journal, actually Bloomberg, last night said that crude oil demand dropped 20% as a result of this so far. And so that's something we're keeping tabs on, as crude officially enters the bear market. That's it, guys. Have yourself a great day on YouTube. Love you all. See you tomorrow. Thanks for tuning in. Sending you love, joy, and happiness. Now we got to open up our trading room, and I'm going to send it over to our good man, Steven, on the oil desk to take us through the oil market and what we could expect today. YouTube, we love you guys. Have a great rest of your day, and be careful. Manage your risk, trade, trade pro. Take care, and goodbye. Ciao.